Welcome to The Explainer. Look, today we're putting on our strategic advisor hats to tackle a massive, fundamental flaw in how so many of us are running our businesses. We're going to architect a completely new way of thinking about your wealth. We're talking about the absolute crucial pivot from being an active earner to an asset owner, and why you literally have to decouple your wealth from your active labor. If you're out there grinding away right now, paying yourself last, and treating your business like it's a savings account, well, you need to pay very close attention to what we're about to go through. So let me ask you, is your money lazy, or are you just exhausted? It's a harsh question, I know, but we absolutely have to ask it. Most people have what we can call lazy money. It just sits around in a savings account, steadily losing value to inflation. Or even worse for a lot of founders, that money is entirely trapped inside a business that requires you to work 80 hours a week just to survive. Your money isn't working. You are. So here is the exact methodical roadmap we're using to fix this operational failure today. 1. The reinvestment tax. 2. The expanding prison cell. 3. Rich versus truly wealthy. 4. The asset conversion protocol. And 5. Claim your sovereign identity. Okay, let's dive straight into Section 1, the reinvestment tax. We need to name the hidden enemy here. We've got to redefine something that you've probably been told is a really good thing, and that's the reinvestment tax. This is the sheer exhaustion of dumping 100% of your profits right back into your business under the guise of scaling. Society loves to tell entrepreneurs that reinvesting everything is some sort of badge of honor, but actually, it's a brutal tax on your life. It results in active labor entrapment. It basically just keeps you acting as a really high-paid employee for your own company, endlessly tethered to the daily grind. Because the single biggest mistake entrepreneurs make is thinking that their business is their wealth. It is not. The business is the engine, right? But cash flowing assets, that's the actual destination. Your business is merely the tool you use to create the wealth that gets you there. If you confuse the engine with the destination, you're just going to end up driving in circles forever. Which brings us to Section 2, the expanding prison cell. Let's look at the actual danger of your current growth strategy. The illusion here is that you're scaling, but the reality, it's actually a technical failure to decouple your wealth from your active labor. Think about founders who used to dump all their profits back into the business, genuinely believing they were scaling up. But in reality, they weren't building wealth, they were just making their prison cell bigger. A bigger business with higher overhead that requires way more of your time isn't freedom, guys. It's just a larger cage. Let me hit you with a hard truth. If you aren't moving profit from your bank account to your asset column, you're just a high-paid employee. Just let that sink in for a second. Keeping all your eggs in the entrepreneurship basket is a massive risk. Why? Because businesses fail, markets shift. If your entire livelihood and future depends solely on your active ability to keep that business running, you don't own a business. The business owns you. All right, Section 3, rich versus truly wealthy. Time for a complete paradigm shift. There is a massive fundamental difference between these two states. Being rich just means having a high income, adopting a spender mentality, and relying entirely on active labor. But being wealthy? True wealth is time freedom. It's adopting an owner mentality. It's relying on asset income. Listen, you aren't wealthy because of what you earn. You are wealthy because of what you keep, and critically, how that keep grows. So it all comes down to this defining principle. Don't work for money. Make your money work until it can afford to retire you. True wealth is found in assets that pay you while you're literally sitting on the beach. We talk a lot about a freedom number, but your freedom number isn't just some abstract dream sketched on a notepad. It's a very real, permanent target that you reach only when your money steps up and does the heavy lifting for you. Moving to Section 4, the asset conversion protocol. This is the rigorous new operating system we're using to solve this. The protocol itself is crystal clear. Step 1, earn active income, using your business as the engine. Step 2, carve out 20%. Step 3, acquire cash-flowing assets. By systematically carving out a strict percentage for assets, your freedom number stops being a fantasy and becomes a ticking clock. Every single time you execute this protocol, you're buying a piece of your future freedom. 20%. And listen, this isn't just a gentle suggestion. Consider it a mandatory extraction rate. When you start carving out 20% of every single check specifically for cash-flowing assets, the game changes entirely. Every asset you buy with that 20% shaves actual weeks off your mandatory working life. You are literally buying back your freedom one transaction at a time. So what exactly are we buying with that 20%? Assets that never sleep. Real estate, private lending, dividend funds. Why these specifically? Because these diversified assets act as the absolute ultimate employees. They never sleep and they never complain. They just produce cash flow, day in and day out, whether you're in the office grinding or taking a month off. Finally, Section 5. Claim your sovereign identity. This is the ultimate destination. To really achieve financial sovereignty, where cash flowing assets replace your active labor entirely, you have to build an asset moat. A diversified portfolio creates a protective moat around your lifestyle. We're looking for assets that provide three specific things: stability, growth, and cash flow. Capital gains are really nice on paper, but understand this: cash flow is what actually pays the bills. Cash flow from these assets is your ultimate insurance policy against a shifting market or a failing business. So here is your mandate. Stop thinking like a spender and start thinking like an owner. The logical next step to finalize your sovereign identity and execute this pivot from active earner to asset owner is mastering asset allocation. To start building your fortress of assets and diversify your cash flow right now, check out 365freedom.online. It's exactly where you need to go to actually put this asset conversion protocol into practice. I want to leave you with this final critical question. Will you keep making your prison cell bigger, paying that reinvestment tax indefinitely? Or are you going to start buying your future freedom today? The choice is entirely yours. But remember, the business is just the engine. Make absolutely sure you're driving toward a destination. Thanks for joining me for this explainer, and I hope you're ready to put your money to work.